it was nice this morning to see the color green again in the portfolio. There were some things that were actually up.
So you made 20% in a couple of days. Congratulations.
Actually, yeah, today it was 20%. Boeing did really well for me today. It was up 20%.
What is that, BA?
BA, yeah, BA.
Might as well take a look at these
I bought
things.
a bunch of Boeing.
Well, another 20%. See, I find this not real. Like this is, it's moving too much. It's not like, let me test the waters out and it slowly is moving up and everybody's unsure if it's going to keep going higher. It's more like it feels like it's trading because it's down so low. They pump it up and then it's a sell-off. That's what it, it's one of these bearish market rallies.
The thing is though, we haven't been investing for 40 years, but I've never
That's
seen
true.
I've never seen anything like this, even historically. And it's quite possible that this is just what the markets are going to look like from now on when something like this major happens.
I'm actually looking at just S&P because I have some lines, and usually, I look at these to see if we're in a bear market or we're in a bull market, what's going on. I think the problem is, look, this is a little bit of technical analysis, which I'm not a master at, but look at the S&P RSI, what's been going on. It's been low, right? So when it was down this low at like under 30, or is it, like, it's hard to see with this thing.
Yeah.
29. Yeah. Anytime it hits at this low, the RSI, the relative strength index, you guys can look it up. I'm not a technical analyst, but when it hits that low, you usually know that it's oversold. And when something's oversold, there's going to be a bounce.
Yeah.
So we could be experiencing right now that bounce. We're still in bearish territory. We're under the 200-day moving average. I think let me just check if that's what I was checking. Once again, I'm not a technical analyst person, but anytime, here's the 200-day moving average, S&P's above it and then crashes right through it. It tried to come back over it. You could see it try, right? And then it failed.
Yeah.
As soon as it failed, look what happened. Boom. Like if I was much more of a technical trader, this would be an obvious sign. I'm not. I'm actually not a technical trader. So I do look at it from time to time, but I just use it as a guide to like, oh, maybe now's the time to buy my long-term investment. You know what I mean? So like buying Tesla or buying Enphase, like that kind of thing.
The next level up from just trying to buy the stocks low and selling them high is learning how to make money when they're going down.
Whoever understood this failure made a killing.
There it is. Look, the short ProShares ETF seeks a return that is 2 times the return of its underlying benchmark for a single day, as measured from one NAV calculation to the next. Due to corresponding returns holding.
Ticker is QID.
It's QID.
14% because the market, and it's a 2x down. So
right, because the market went up. But
7%. This is 2x. This is leverage. So you can lose a lot of money here.
what I like about this is that the price point.
$21.
Yeah, I like that. I like that price point. You can pick up a lot of shares, which at the end of the day, the stock doesn't have to move as much. It's more feasible for that to do, a $5 move in a day than something at $200 that dropped 50 or 60.
So this is pretty much at the low right now in a while.
It is very low.
Look, it's low. So basically the market's been doing well for a long time. That's why it's low. So if you wanted to take a gamble on the market falling lower, which we sort of believe, it might be worth like a $1,000 bet to do this.
Keep in mind, even when we had that like little fake rally, look at it. The highest it hit was $30.
Right.
So even with that big swing, that's $9 off of what it is right now.
Yeah, yeah. And if we think it's going to at least touch the bottom again, so you could make, I don't know what the percentage is, but it's like, what is it, 30% around? Yeah. 40%? So I got to do more research about shorting with these ETFs, but they do look interesting to take a small bet on,
Here, let me show you this.
Let me exit.
You see that? That's what it's been doing over 3 days. Boom.
Yep, yeah. It's probably a good time to buy.
Look at it. So basically, look, this is what I wanted to see. So in February, when the market was at its all-time like high, this is right before it dipped.
Right.
It opened at 18. It closed at $18. We're looking at it now, and it's 2021. This is
Well,
actually
you're saying at the all time the market was low, and
what
at the
I'm
end of
saying.
right,
February 21 is right before the market like really started. Like in February, March, when everything really started tanking, you can see it.
right.
This is when it started to
It
go
started
up.
to rise, right?
So if you got in at 20, what is this? What was this at this point? This was
Anywhere around 20, honestly, around that
at
whole month.
18, but
Yeah,
from $18, it only went up to about 30. So it almost doubled. It
right.
almost doubled. You'd have to put in some serious cash on this. But this went up to 30 when we had, this is basically the upside down W. This is the tip of the M.
Yeah, I don't know how low the market's gonna go. Everyone thinks there's gonna be like a worst case scenario, but I'd be happy if it just confirmed the bottom at I think the S&P bottom was what, 2100, somewhere around there.
I don't
I'd be
know.
fine if it confirmed that Tesla hits somewhere around the $350 again. At least we get as much as we can, get as much Uber as we can, get as much Lyft as we can.
I might actually just go and put $1,000 into QID, see what happens to it over time, because if that does poorly, then that means my portfolio is doing well. If my
Right, right, right.
portfolio,
It's such a hedge, basically.
yeah,
Right.
if my
Yeah.
portfolio is doing really bad, then I'm still making money in some other place, and I could just sell that to continue to buy the actual stocks,
Right.
the securities that I want at a low price
Today, should we go over Square, because Square seems like a perfect candidate to short.
to short them. Well, why? Because they were up,
They're up 20%.
right?
They're at a 70 PE, or something like that. Like, and the thing is, they were doing well before the collapse, but what's going like the macroeconomics, as everyone talks about, what's going on? Small businesses are going bankrupt. They can't pay their workers. They're closing down. I'm not saying that's a good thing. That's a terrible thing. But the fact is, it's happening, and Square's whole business is based on selling their product to these small companies,
Yeah.
small businesses. So I can't imagine Square is going to come out ahead in this right now, at least. I'm not saying in 5 years. They're probably going to do great. But so I think like right today, it's up 20%. It can't be moving up right now. This is like totally BS. It's
Well,
going
they
to be,
also
should I bring it up, or you want to bring it up?
in
You
the
want to bring
White
up
House
Square?
in the White House press conference today, they were saying that small businesses are having problems getting the loans, like actually getting the loans.
And it's going to take longer for that
Yeah,
too. So
exactly. So
what
it's
happens, which is effed up. It's completely effed up what's going on with our country, and that we can't do anything in a timely manner. We bandage everything now. Okay, everything's a band-aid, and it's messed up. But the thing is, like right now, when this market rallies, it's once again people who know that it's happening, and they're just playing the market. Right, the algorithms are playing the market. We're playing the market. Other people who can afford to play the market are doing it. But we all know it's going lower, at least at this point.
I mean,
Because
it absolutely has to. Here's what it's at now.
right, it went up 15% today, and I was like looking at the option chain, which I'm still not great at.
What you're looking for is something like this. You want to be able to sell them at what they're at now.
Yeah, right. $3 you got to pay approximately,
This is
and it was cheaper earlier today. I think it was like 280 earlier today. So
no.
that
I was looking at the wrong. Here's the bid. This is the bid in the ask. So for $50, 267,
oh, is it
267
267?
bucks.
Yeah.
Yeah, $267. You can turn around and sell this thing. You can turn around and sell this thing. You can make $5,000.
No, $5,000. If it hits $40, then you would, let's say you have one contract.
I'm saying if it tanks.
No, I'm not saying it'll go to like zero. I think it'll go down around 40, somewhere around there makes a lot of sense.
40. But what I'm saying is you're now have control of $5,000 worth of the stock.
Right. So if you buy one contract, 100 shares, you have $5,000 control of the stock. And if it goes down to $4,000, you did pay $267. So you make $700 profit within a week.
Within a week.
I mean, these are small. This is chump change for real traders, but it's a small bet to maybe triple your money, right?
If you control 5,000 worth of the stock and it's worth $4, you put in 250, so you make $750. If you took that out and put that into another stock that ends up shooting.
Oh yeah. So what I want to do is, by the way, I think I do want to buy it tomorrow. I want to check this again because I was doing some research. There's some terminology on on TD Ameritrade trading, which I think we spoke about. What is it called? Stop
Loss.
buy to open, right? We need to do a buy to open put. So let's do some math here. Maybe this will be our last thing we do, but
Yeah.
because we might want to do this tomorrow.
I'll share my entire screen.
And I think we'll maybe do a video, or I'll record my screen if I do it, how I did it, because it's still even new to me. So there must be somebody out there who's also interested and not quite sure about how to do this.
It's $50, which is roughly around the same price as the stock. So if we want to be able to sell this thing in a week or 2 weeks, anytime for $50, this is what it would cost you. This is the bid and the ask column. So the bid is $267. This is what people want to pay. And the ask is $310. So if you come in here at $2.75, you would pay $275. That $275 would give you control up until April 17th to be able to turn around.
It's like 11 days. You have 11 days.
11 days, roughly, yeah, say about 2 weeks, to sell the stock at $50. So you're able to turn around and sell it. And that's worth $5,000 right now. If the stock goes to $30, you are set to make $20 per share. So you're set to make about $2,000 at any point.
Minus your $267. What I like about this is that if I'm only putting up $267, that's what I like about it. And
well, it would be
that's all I'm risking.
You got to come up over the bid. You're not
right. Okay. So $275. What's nice about this is if I really do believe it'll go, let's say to 40. All right. Forget about 30, but let's say that's $1,000 that I'm making in profit, and I only put in $260. That's like a 4x return, right?
It's a 4x. Yes, if you were to make, yes, it's a 4x return on your initial investment. And considering that you don't actually have to convert the put option, you would just essentially sell the contract.
Right, and then I'd make 750, maybe a 3x return, whatever. But I think people are getting it that I'm making a 300% return, as opposed to if I just bought the stock and it went up $10, that return on my capital invested is not the same. It's not a 300% return anymore.
Right. The profit that you make on a put option is the difference between the current value of the stock and what your strike price is. You don't make the whole $5,000. You only make the piece that's
no. Which is better if you know the reason this is hard is because you have to have a timing component here. I have to know that within 2 weeks or 3 weeks or a month, this is all going to work out.
Right.
Put options are amazing. If I can just get a put option that's infinite.
Right. That goes on forever. And then one day.
And then one day I just cash whenever I want. Yeah. That's the best.
An infinite call option on.
Or an infinite call. If I just said. All right. Imagine I got like a call option that's infinite on Tesla, that a 10-year call option that like for $2 a share, like that's like a no-brainer investment. So this is hard because I have 2 weeks to be right. That's why it's hard. And people timing the market is not,
but it's
not great.
The thing is, this is different. Timing the market usually refers to like, where's the bottom? I want to buy in. Where's the bottom? This is not about that. You're not trying to time the market more so than you're saying, I'm looking at the news and I'm looking at what this company does and I'm looking at what they need to do to make money. And it's not possible in this market. So there's a high probability that their stock price will go down as people bail on them. That's all it is. And you're probably right that it's going to go down.
Well, the thing is, if I'm wrong, I mean, I only lose $267 too.
If you're wrong, you lost $275 versus buying it, waiting for it to go up $10.
Let's say I wanted just 5,000 worth of these contracts. So 267, I don't know what that is. 5,000 divided by 260, 275. How many contracts I have? 4 times 5, 20. 20 contracts I can have for 5,000. And if I am right, I have multiplied my money. If you could do the math.
I did this with Lyft the other day. And then we do got to end this one.
Yeah.
You got to end
this but this is interesting, right? This is
interesting. And I think this is the kind of stuff, this is the part of investing that they do in their house by themselves. And that, you know what I mean? This is the research.
Right. We're figuring out this shit for you.
Yeah. You know, at least, you're not doing it alone.
Look, you're a freelancer, you're home.
Lyft's current price right now is $25.73. Okay, let's say it was $25, and you're an investor, and you're like, oh man, I got $2,500. I'm gonna buy 1,000 shares right now, and I'm gonna ride this thing all the way to the bank because I believe it's going to go to $75. Right. So you're like, I'm gonna make. What are you gonna make? You're gonna make 3x on your money in 2 years. Okay, What if you took that $2,500 and instead of buying the stock outright, what if you bought $2,500 worth of call options at a strike price of $25?
Right.
Right? So here's a call option at $25. These are calls. Okay. The bid is $7.50. So let's say you came in at $7.50. You're gonna get that one bought. So that means each contract is gonna cost you $750. So if you take the 2,500, and you divide that by 750, you can buy 3 contracts worth.
Right.
Investor A takes $2,500 and buys 3 call options for 3 years from now, and investor B buys the stock outright. The guy that buys the stock outright in 3 years is going to have $2,500 divided by $25 a share. He's going to have 100 shares of Lyft. It goes up to $75 a share, and now you have $7,500 minus the $2,500 that you made. So it took you 3 years to make $5,000. That's a great return. You go, oh man, that's awesome. Lyft did what it was supposed to do. You took the 2,500 instead, and you bought 3 of these. It's 2,500 divided by 750, because you would put the bid in at 750. You would buy 3.3. So you could only buy 3. So you're going to have 3 of these options and a little bit of cash left over. You're not going to spend the full 2,500. It's 300 shares of Lyft is now at $75 a piece. It's worth $22,500. You need to take out the 750 that you put in,
and minus 7,500.
Minus 750 for the first call option. Call option. Minus 750 for the second one. Minus 750 for the third one. That's
and minus 7,500 for the shares.
And minus 7,500 for the shares. You've made $12,750
instead of 5K, right? Instead of 5K.
5. So this divided by 5,000, you've made two and a half times the profit in the same amount of time on the same stock with actually less of an investment, because you weren't able to buy that fourth call option, which would have just made you even more money.
So here's a question. We have a whole 2 years for this, because I want to do this one too. I like this one. I want to do
Lyft one is the one for Lyft. And
well, it makes sense. It makes sense if you think it's going up past $50. It looks like you're going to make more money than just buying it outright. That's what it looks like.
Well, a way that you can gain this would be to get your strike price lower. You're going to pay more on the bid. Like if you do 250, you're going to pay more. You're going to pay a bunch.
Well, no, I like paying less, because it's a gamble too in some respect. So if you pay less and you make a little bit less, that seems like an okay trade, you know?
Yeah. It does. But this is something that I've been experimenting with, and I think a good strategy for this would be, hey man, if Lyft is at $25, don't be an idiot. Buy it. Buy some of it. But if you if you got $2,500, maybe you spend $1,250 buying the actual shares, and you put in the other $1,250 to maybe pick up 2 contracts of this. Maybe you spend $1,500. You spend $1,500 to get 2 contracts to give you control of 200 shares. The other $1,500 or whatever you put it into, or the other $1,000 you put it into the actual stock. This way you have some stock, and then you're good. You know what I mean? That might actually be the move to when you're making these. So in other words, we're all waiting for the bottom to like time Uber, Lyft, and Tesla. Maybe it's not about just dumping it all into the actual stock, but like splitting it up and doing a 50-50 thing. So you do.
Well, I think you play both sides, like we discussed. In the short term, we can get the shorter term contracts that are going down, the puts. The longer term, I think these are better. The calls on the future that Lyft and Uber are going to do better. I think they will, in the longer term.
Once we get out of all this, I think we're going to be fine. And the other thing to consider too is autonomous vehicles are coming at some point. And so once those autonomous vehicles come, all of these companies, Uber and Lyft, will get 80% of the money that's going out the door right now to the drivers. That's going to go right into their pocket.
Right. Well, which is unfortunate. Basically, I agree with you. The drivers will be fired. Or they'll be like in cities that don't allow autonomous driving, right? So basically, Uber, Lyft, Tesla, they're all going to be autonomous car companies. I don't know if it's 5 years from now, whatever, but this is the way it's going to go. Even if it's 10 years, this is just the way it's going to go.
No, eventually that is the way it's going to go. And strategically thinking, if you have $10,000 and you're waiting for the big drop, say on Tesla, maybe the grandmaster level of investing is you put 5,000 into the actual stock. You take $2,500 and you get a call option as low as you can get out of pocket. So you can buy as many of them as you want. And then the other 2,500, maybe you put some put options on it to balance. This way, no matter what it does, you're hedging against, or if you have, say you have 100 shares of Tesla, let's just say you have 100 shares of Tesla right now in your portfolio, you want to buy more, maybe you put a put option on the 100 shares that you have at the strike price that you have. So no matter what, you're protecting your 100 shares. You're going to lose a little bit of money, but you're going to be able to control how much you lose based on the put option. But you put that put option on it to protect the 100 shares you have, buy another 100 more, and then put a call option to also.
This is definitely advanced shit.
This way, no matter what the stock does, you're set to make money. And by the fact that you're using the hedges, you're cutting into your profits, but you're also minimizing
losses.
Yeah, you're minimizing your potential loss. That's like level 3, which I think we need time to like.
We need to digest that. Yeah, we're still trying to digest exactly.
Trying to get one of these things executed.
We've got to get one executed. Which is funny. We're talking advanced stuff, and obviously, hopefully, we'll build a community who can help us out too. Hopefully, someone out there knows how to do this pretty well. Makes a little video, tags a link to the bottom of the thing, and
if anyone's got an idea, I mean, what do you guys? Let us know what you guys think of that.
Well, I want to see an exact A, B, C, D, like an exact 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 step plan, and someone executing it. Nobody really does that, We're
gonna do a video. We're gonna do a video where we're gonna say take Tesla. We're gonna take Tesla and we're gonna take $10,000 and we're gonna say how can you make the most money on Tesla while at the same time making sure that if the company tanks, you're not at zero. That you're still making some money and also minimizing your loss. That's a video that we should do. Actually figure out the.
Yeah. And I actually want to do a put on Square, maybe tomorrow even. I'll see, I have to still do a little more research, but I think I would sell that contract when it's at $40. And then I'll know if it hits that, then I'll know what is my actual profit because TD Ameritrade will take out all the fees.
What? Oh, and, well, yeah.
Whatever that actual profit ends up being. I just want to try one. I'm willing to lose the $275 and to do a real test. I guess the only way you learn is by losing money. Yes,
you gotta do something. You gotta.
Yeah. Okay, I think that's good for this video, guys. We appreciate you joining us for episode. What is it, 5?
I'm not even counting anymore.
I think it's the 5th episode. We're gonna have a lot more. We're gonna talk about crypto. We're gonna talk about Bitcoin. We're gonna talk about XOP.
We got your Litecoin. We got your Dogecoin. We got all. Yeah.
We got all your shit coins here. Don't worry.